First idea, Domino's Pizza.
Domino's Pizza is not having a good year, share price-wise, and a lot of the problems had to do with finding drivers. You know, there's a labor shortage in the U.S., and you know, it's so weird that everybody's so worried when we can't about the stock market when unemployment is so low. But that's another story. But the reason why we like Domino's Pizza is we think they've solved a lot of the problems that it had recently. The drivers, the amount of drivers that they were having problems recruiting has improved. I think some of their costs have now peaked, as well as they just recently raised prices. So Domino's has a great math program. They have 200 to 300 stores that they open every single year.
Wow.
They buy back stock. It's all franchise, so they have really no costs. The capex is like near nothing. And we expect earnings over the next 5 years to double. The stock hasn't done well in the last few months, but I think going forward, you're going to do very well owning Domino's over the long term. They want to open up 18,000 stores. They only have 12 or 13,000, so a lot more room to go.
I seem to remember a few years ago they were famous for their speed of delivery, but the pizza was a bit meh. But they thought they said we'll improve the quality of it.
I think they've improved the pizza a little bit. You know, if you're looking for fast food pizza, I mean, you're buying it based on speed and not so much on quality. Okay,
CCL Industries, a big packaging maker.
Yeah, so we're looking for companies that can come out of this type of economy even stronger. Companies that have strong balance sheets, that have management that have been through recessions and pullbacks and downturns before. And that's exactly what CCL has done. It's one of the world's largest makers of labels and stickers. It makes beer labels. And, you know, I think it's a very defensive company. The balance sheet is perfect. The company's ready to make acquisitions. It's grown over the years by making very amazing acquisitions, and the returns on those acquisitions have led the stock to a great run, but not over the last few years. But we think that's going to turn around. This is the time for it to thrive.
And your final idea, Ferrari race in New York.
Yeah, so Ferrari just launched a SUV. I'm not going to pronounce the name because I won't do it justice. But Ferrari is sold out on that car. So essentially, Ferrari has backlogs for years on any of its cars. And because when people buy their cars, they go up in value, so they can resell them for more. Who wouldn't want to buy a Ferrari? Well, you need a lot of money to buy one. It's a work of art. But the bottom line is they're great capital allocators. They generate a lot of free cash flow, very high margins. This is not a GM vehicle. This is an expensive vehicle with 40% margins, and we see years and years of growth, as well as an electric vehicle line coming out very shortly.
Yeah, so Rolls-Royce have an electric car coming too. So they're headed. Yeah, well, I mean, these electric cars are pretty nifty.
Well, people are worried it won't duplicate the sound and the rev and the engine. Ferrari says, don't worry, the experience is going to, be amazing. And this is not a, mass market product. 9,000 to 11,000 cars made a year. They limit it to create the air of superiority, of luxury and quality. And I think Ferrari is just one of the most incredible businesses we've ever seen. The stock is pulled back like every other growth stock, every higher multiple stock. I think it's a very good entry point here.
Would you, if you had the money, would you buy one?
No, I would buy more Ferrari shares.
Right. I wouldn't buy one because, well, I'm not that keen on cars, and it's just a liability. Somebody's going to scratch it on you or...
Yeah, I'm not a collector of anything. I like to collect old investment. I'm boring, Andy. Yeah, so no, I have no interest in cars and that kind of thing. I like investing.
Okay, and what about investing in what about Tesla, the big question, TSLA?
It's coming down to a level that has piqued our interest somewhat. I mean, the growth is phenomenal. The valuation, I think, is now trading at 35 times 2023 earnings. That's not terrible. Balance sheet is pretty good. But I didn't like the other day where it announced it has to cut prices to get more sales in China. So maybe the pricing power isn't there as much as we thought. But something we're keeping our eye on.
That's interesting. It could be not just a cult stock, but a reasonable investment.
Yeah. The only problem is this Elon Musk is insane. And did you see him walk into Twitter headquarters carrying the sink?
I thought it was a pizza at first.
No, I don't understand where he's coming from. I don't get the guy. But it's very hard to get incredible geniuses.
Yeah, it's, yeah. He's a flawed genius, it seems, in many ways. Yeah, yeah.
He's got ambitions that are, to Mars and to the moon, right? And so
Right. Yeah.
we'll see where it all plays out. But very interesting, of course, as the company TUS used to be uninvestable. It's now become in the realm of maybe investable.
What about Magna? Is that one that interests you, or I mean, as a play on the auto market?
No, I don't really like that type of business. Our clients own shares of a company called Copart. Copart
okay.
is involved in if you get into an accident or your car is totaled, Copart will benefit from that as it resells the car either to another country. And with it looks like, Andy, autonomous vehicles, they're done. Doesn't look like that's going to happen. That's great for Copart because humans get into accidents, unfortunately.
I guess ultimately machines will be better drivers because they'll be in touch with each other, the cars.
They can't figure out the little things, like if a pigeon lands on the street or if a squirrel runs across the street, it doesn't know what to do. And that's the problem. So we're not ready for prime time. Who knows if autonomous vehicles will ever happen?